So it's good catching on Saturday. We have a relaxed day, and tomorrow we can wake up a bit later and you can join your family. So it's a good day to discuss, and a lot of confusion still prevails in market, and a lot of expectation from finance minister. Uh, Still, people are expecting a bit on auto. I don't think that finance minister is in a mood to help cutting down GST rates on auto. So probably we got two news. One is on housing affordable, and that too again, which is non-NCLT. That last minute, 10,000 crores being uh, additionally added to the kitty, and second is more weightage to exports. So probably not much in regards to auto. That is where every time. Excuse me, I have a call. Okay, great. So again, expectation is not met by finance minister on Monday. Let's hope internationally we are at par. Not much of selling or buying has happened on international fund. So probably I guess again an opening which is going to be at par, and gradually over a period of time we will move up to some 11,150 odd level. So previous high was 143, I guess 141, and I think for Monday we can break that 11,150 mark, and that is a bit happy situation. So Friday, if you've seen that, I've given a buy call on Nifty when I said that Nifty need to close above 11,065. That is necessary because if it breaks 10,950 and closes below, it will end, giving the market a bearish trend. So that is what I was expecting, and this was a first sell, and this is 0.61 retracement of the previous rally from the bottom, and I was expecting this kind of morning star, and that's where I've given a buy. So luckily, stop loss did not hit, and we rallied to the near to 11,100. So as of now, situation is a bit under control, and one thing I would like to make uh, very clear about this market, that uh, this equation is going to be there for next 6 7 months, 8 months, till the cycle gets that support of liquidity, and the performance is missing all around the world. It's not that we are facing the problem, it's a liquidity crunch, and the dependency of all sectors, it's still there is a demand of liquidity, and there's a lot of dependency, as I said. So the problem is going to stay in, and what we have to fight is we have to fight the sideways trend in the market. So whenever there is a sideways trend in market, a lot of stop losses hits on upside and downside, because people expect a volatility, people expect a momentum, and that's where the money is. So it is not an easy market, first of all, to trade, and at the same time to control your emotions of not trading in the market and sitting idle, over a period of time. It's a bit difficult, and that is the first rule. If you're not controlling yourself, and that's where you end on to losses. So this picture is going to stay. And what I'm tracking currently is I'm not tracking mid caps. Mid caps is a good investment theme. All those thinking to put their SIPs, they can start putting in money because it's an attractive valuation. So over a period of time, say 3 4 years down the line, you'll certainly make very good return. But what you have to track at this point, you have to track the heavyweights. So if we say heavyweights, we will talk about the weighted stocks on Nifty. So I would be tracking HDFC Bank, which have 10.79 percentage weight, Reliance Industries 9.29, HDFC, Infosys, ICICI Bank, TCS, ITC, Kotak Bank, L&T, and Axis Bank. So altogether, this makes 61% of composition to Nifty. And tracking these stocks will give you an idea that yes, where we are trending. So what I do is I just put this composition alongside in my other system and keep on tracking their bullish nature or their bearish nature. So as of now, these stocks are stagnant. I've been watching this HDFC Bank since its fall made a high of 2,501 or 2. I've been tracking this. It made a low of 2130 or 40 at the low, and since then it has been hovering between 2200 to 2270. So HDFC Bank looks more kind of a sideways trend, and it is not giving an upward kind of momentum or volumes pickup. So there is a sell zone when it hits at 2275, and there is a buy zone when it hits at 2220. So bit in a sideways, it's better to trade this sideways trend at the bottoms. You can put your RSI whenever it is oversold. You can put your buying inputs, and whenever it hits your resistance, you can have your 70 to 80% sell off. Rest 20% if momentum carries and gives you some another percentage. So Reliance is again in the limelight. You have seen the news which has been flashing on WhatsApp, and it's there that they have a book size of a loan book size of 4,88,000, and with an hourly interest of some 5.5 crores. So even Reliance is looking for a stake sale. So everyone is looking to cut their debt. It's a weightage, and this structure will take some time for everyone to improve their balance sheets, because there is a change, there is a revolutionary change of not having debt on the books, because the business is not so good that you can pay your debt and at the same time keep your companies working with good profits. So whenever there are low margins, there's rolling of liquidity, less businesses, it's better to cut down your debts and not to borrow much. So that's where everyone wants a good EPS, and that's I think a base parameter for everyone to invest in the company. So Infosys to stay. I mean, it's a good to trade IT sector this time, because last time when there was a great fall in 2008. There was a 5 years consolidation in 2013. We've seen pharma performing very well. This time, what I believe is IT to stay. So if you want to stay safe, you want to play safe. Better what you buy is all those Tech Mahindras at the bottom. So Tech Mahindra is a very good range. It made a low of 608 at the bottom and touched high of 900. And these stocks will be trading in range. It's safe to play. So for this 2019, I have chosen IT sector to invest, and I want these sectors to be in oversold zone. Say RSI hits below 25 or below 30, I'll try to pick them on daily, because I know that these are going to be cyclic return scripts, and I would be investing or trading in these scripts to play safe. And when we talk about banks, I am not so comfortable with ICICI Bank, because I know the last chapter which has happened was with Chanda Kochar on 3,200 crores being sanctioned to Videocon. So I believe ICICI Bank has a good exposure with SMEs and MSME. So probably if there is a slowdown in performance, or if there is any surprise which may arrive in terms of lending or something, I don't want to take that risk, because for me it's an overvalued stock. So it's standing at 410 to 420. I don't feel safe to invest in. So I think the true figure for me stands at 310 or 320. My parameters on monthly, again, it shows some overbought material. So it's not in my liking book. So probably it's good to have that 385, near 385 you buy, because it's been trading in between 385 to 420 band. It's not moving up, and the moment it breaks that 385 be cautious, everyone. You can note this point. The moment it breaks that 385 mark, it is for sure that it should hit that 320 to 330 mark. So if you're planning to have this in your portfolio, I'm not liking this counter, right? Then TCS again a good stock. It's in a range. I request everyone to mute. It's creating a disturbance. Okay, so TCS again, one of the likes, Infosys TCS. ITC, it's bit in oversold zone, so it has maintained that band of 230 310. So a safer bet, but I think a precursor again. So I've seen this move in 2008 as well. So this was smart enough to sell down before any crisis. So I don't know whether it will give a jump or the kind of return we're looking at this point. But this counter is range bound at this area. So it's better to buy on oversold areas again and to sell at some rally. So expect what 10% from the bottom. Yeah, so if I take that bottom around 230, it will not easily cross the 255 mark. It's very strong resistance area there. So it's been continuously falling from those areas. So Kotak Bank again. So this is hovering, at the price to book of around say 4 times, which is I don't agree with the prices. So I think again this bank needs a correction. L&T again range bound. Axis Bank has been correcting since levels of 810 and 20, and it has done recent stoppage at 640. That's a very crucial support, and the moment it breaks that 640 mark, my target stands at 545 to 510 on the lower side. So at this point, when we say that Nifty is standing at 10,800 or 900 and on upper band say 11,200, 300, it is acting very smartly because it's been consolidating. Loads of mid caps and small caps, they have kind of made a bottom because we have seen good volumes on reversal. So this shows that there is not much of fall in these mid caps, but yes, they can stay for long at these areas because all those material which is being sold at the top requires a reversal, and for a reversal it requires a time correction. So if they're not falling from these areas, they will take your time. They will eat your heads. They will actually test your patience to move to those levels where you bought that. So it is it gives us a safe picture when I say that if I buy a Ashok Leyland standing at 55 53 odd level, I can sell Ashok Leyland at 75 at 72, but I cannot sell Ashok Leyland at 100 plus in a short time, right? So it's a good opportunity to trade all these oversold counters, trade them for 10 to 15% upmark, let them come back and then sell upward. So there is not much of room on downside because they will consolidate. And since Nifty is buying that time, it is good that even Nifty goes for a time correction, not head towards that my point of 9600. But if it does on these large cap, if any sell down, any negative news on say Reliance or any downgrades which come on these banks, especially Reliance, we have seen few downgrades expected from the market, and we've seen some re-rating happening on HDFC post this LTCO, not paying that interest of say 20 crores, and we have seen the portfolio as well of other banks or other exposure to the same NBFC. So things are rolling in the market, and it is coming one by one, which is healthier. It is not coming together. So Nifty is getting time, and if these things to roll on, I think 10,500, 600 could be the bottom, and then 11,350 to 300 I think should be the top. So Nifty can be in this range, and it is for the traders who are actually not professional. they may be hit with a lot of stop losses, and it's a pain for all those investors who will be investing in this 1 year, because stock prices will not zoom as per the expectation. And the moment it comes down, these short-term swing traders, or the short-term investors, they might lose confidence. They'll be selling the lows and buying the highs, in just a hope thing. So yes, I believe that this markets, if they're going to sell down, this is the correct point. If there is any correction, if there is any surprises in large cap stocks hidden, it should come. This is a very good time. So mid caps are already done with bottoms. They're already at very attractive rates. Some mid caps are, in fact, we are getting at the prices 10 years before they were trading at the same prices. So I think a lot of attraction is still there. So so currently, what you should do is you should actually track the large caps. The screen is in front. These are the stocks which you have to track. So the way they will behave, the Nifty's still maintaining at this point. So it will be a gradual up move in these stocks. Nifty will move upward. The moment there is any surprise in all the above script, so get ready and be smart, not to buy till the selling part is over. Okay, so I want these to be checked one by one, and then we can check the Nifty. Okay, on charts. So especially HDFC Bank, I have shared this chart in WhatsApp group. If you remember, I'll just try to explain what I think on this. So this is what HDFC Bank is doing. It has made a triangular formation. You can see it, and it is just supporting the RSI move. And this was the sell from 2501 and made a low of say 2130, 2140, and then made a high and lower lows, and that's where we got the divergence in RSI, and it got the support, and that's where HDFC, it's been rolling between that 2270 mark and 2150. So it's a kind of, again, inverted head and shoulder, you can say. You can say that it's a kind of symmetrical formation and making a higher lows and gradually picking up. So a previous, so probably this was a Thursday when we have seen this move, made a high of, when HDFC was utilized to hold Nifty, made a high of 2289. And on last trading session, it could not actually break the previous opening price of 2270. And we have seen a kind of spinning top on HDFC, so which shows a kind of rejection at higher prices. I request everyone to please mute. दोस्तों please mute कर लीजिए. Thank you. So there is a rejection at upper band, and it seems as a supply zone. So what we are looking forward to is to break this price on upward. So before that, it may touch a super trend at the bottom. So it's a buying opportunity. All those who are trading in Nifty, they can put buying price say 1245, that is first, and second, if it gets down to 22, 27 or 25 zone, you may put a stick stop loss of say 2217, and you may also try call option if you want. And if you can see that there is a gap on upside, 2369 and say 2351, so that's a price area. There's a gap upward. So what max it can do is it can hit 2356 as a target. So if we are expecting a Nifty move, which we have already seen on Friday, made a move of 93 points on upward. So if it is making that move on upside, so it's a good area because HDFC Bank has a good weightage, and if it has to move up, Nifty has to move up. It's a good buying point. So you can put your buys at 45. That is your first leg. Second leg at 27, and on a closing basis, you have a stop loss of 22.77, 22.17, and we have a target of 23.55. So it's a good bet. I've given you one trade in HDFC Bank and shown you why. So this is where you can put in. We can check the other script now. The second heavyweight is, so we'll come to Reliance. So I think net is a bit slow. It's taking a bit time. Okay, this is Reliance Industry, and this was the area when the deal was announced, and it made a high of 1300 something, 1302, and since then it's been consolidating or kind of distribution we can see, and it has tested the symmetrical formation. This is a large previous, it's a long-term trend line. It's a triangular channel which you can draw, and this you can see that it has taken support exactly at the triangular formation, and it is just trying to build that base at these areas. So I think we've already got a long signal uh, at this price, and it's a good bottom to test at 1205. I think somebody wants to take that, they can have a stop loss of say 1195 on closing basis. The first addition they can make is because since we are expecting upward move in Nifty, so any 10, 20, 30 point correction is a good to catch. So it usually makes a base of say 1218. So have a buy of 1218 and and a second buy at say 1205 if it comes. Take a stop loss of 1196, and if it moves, it will make on Monday kind of morning star formation. So I think any close above say 1229 is a good to carry short. You can carry your positions if you get that 29, any closing above 29. So it will attempt to make a morning star pattern. If Nifty moves another 50, 70 another points, I think 1237 to 1245 will be a first target. Okay. So I'm not expecting a bigger move in Reliance Industry. There is a lot of selling pressure, which you get at say 1250 zone. So I think it's good to book these areas. Anything between 1240 to 1248, you can sell like 70% or 80%. I am not expecting Nifty a bigger move or something, but any short-term participation on these stocks, I think it's good to support that Nifty. For me, Reliance is a bit non-performer, and you all know that I have lower targets of 920 on Reliance. So I think almost all the webinars we covered this. So, but at the same time, being a technical trader, I would like to be with the market. What I think, what my perception, and how I think uh, that is good to for a positional bets. But I think it's better and wise to be with the market. So yes, 217 and 225 is a good zone to accumulate with a target of 1248 on Reliance Industries. And if Nifty is moving up, so we have got three trade guys. Just to repeat, Nifty, we are buying if we get that at 11,056, have a stop loss of 11,020, and with a target of 11,056 on upside. This is one. Second call was on HDFC Bank. I've given a buy. So HDFC Bank is a good buy with a target of 2356. 2217 is your stop loss, and you will buy 2227 and you will buy 2245. And third is on Reliance Industries. It has closed at 1225. 1218 and 1205 is your buying point with a stop loss of 1196 and with a target of 1248. So you also should learn that whatever we are buying in anticipation that Nifty should move up. And we have seen first half selling on Friday just because a lot of carry moves on Thursdays. People, usually buy these and just to break their values, just to break all those long, or just to cut down on premiums. The first half was slow, and the moment people were out of the stop losses, they've stretched Nifty to uh, for 92 points and upwards. So on Monday, I think a smart opening, any 10, 20 points negative, it's a good opportunity. So let's check the other counter.
HDFC.
Yeah, so HDFC, Infosys, and ICICI Bank in order. Okay. So this counter comparatively, when we compare this to other scripts, this is a bit slow. It requires loads of consolidation, and then it moves upward. So if you can see that this was a kind of cup and handle formation, and then it consolidated well after making a handle, and then it broke out to made a high of 2350, and that's where we headed towards the 12,000 mark. They utilize that, and since then there's a lot of volume happening, and it is making a downward channel, making a lower high pattern. And this is the first time wherein we can see that if you read charts, you will see that a lot of stocks are making inverted head and shoulder pattern, and the theme is all same. You see Nifty, it is making inverted head and shoulder pattern. We have checked HDFC, and this is again HDFC main. We have checked HDFC Bank, and this is HDFC. So again, an inverted kind of head and shoulder. So probably again, so the moves are likely. So if all these 10 stocks move in one direction, Nifty is certainly headed. But the moment there is a stoppage price rejection, you should actually recheck your trades and with a view of